first tip I want to give everybody is this, and this is very, very important.
Guidance to help retail investors weather the tariff storm that is ripping through the market right now, dragging prices even closer to a bottom.
We may not be there yet, but we're really getting close.
Can you still make money in a market like this?
Yes, not all is horrible. There are certain industries and sectors that are doing well, that actually thrive in this kind of market environment.
Successful trader Roger Scott with the Trading Pub takes us on a deep dive into how retail investors and traders can avoid some major losses right now.
That's not where you want to go.
And actually find a path towards profitability even through all of this market turmoil. Let's dive in. Roger, so great to have you here with us today. Thanks for taking the time to talk on what's a really big day in the market.
Yeah, it is. It's definitely a day in the market. The volatility today is something to behold. The market's down about 4% right now, and doesn't look like it's bottoming out anytime soon.
Yeah, I think that's the fear for a lot of Americans right now. A lot of people all over the world, really, because it's not just the American markets. This is real big international reach, and all of the markets are looking at this wondering, when will it stop and how low could it go? Any insight for people on that?
Yeah, I actually do. One of the biggest factors that is going to determine whether or not this is going to stop and when it's going to stop is when we're going to start seeing some certainty in the markets. The example I give somebody is if you go to a doctor and you have a broken leg, you come in there with a broken leg one day, he's going to say, well, you need to do this, this, and this. But if you come in there with a sprained leg, he's going to say you need to do this. The problem is right now, we don't know how bad the leg is broken or how. So again, it's not really a political discussion, it's a financial discussion, but unfortunately, the two are at a crossroads right now, and we kind of need to get more clarity from the government so that we understand the depth and the gravity of these tariffs and how much they're going to have an impact on our day-to-day lives. And till we do, it's going to be really hard for the market to start discovering value, discovering price. And that's really one of the biggest problems. If we saw something come out and our president or whoever representing the president would say, hey, this is going to be this, and this is going to be that, and this is going to be that, it's set up for the next 5 years, markets can start discovering value, but we're not there yet. And that's really the frustrating part. It's not what's happening, it's the process of us finding out what it's going to be. I hope that makes sense.
Yeah, absolutely. That uncertainty and the unknowns always
hard to heal from something till you know what you have.
And I think that's why so many investors are looking to know what to do with their investments, how to protect their investments. And we're going to get into that. Roger has a look at a few industries that are really good defensive industries and even some stock picks he's going to get to in a little bit. But first, we want to continue this discussion on what these tariffs could mean for the market just and the economy around the world. Let's talk about why we're seeing such a stark drop, less than 24 hours after this big announcement, an announcement that we've been expecting for a while, but I think people were really surprised by what came out yesterday.
Yes. Me talking to a lot of people and just basically what we know about Trump, we know he's a negotiator. We know he likes to negotiate. He likes to be really hard in the beginning and then he softens up. And me and several other folks thought that he was going to, that was the hard part and he was going to soften up on us today. And he did not. He did not. He doubled down. So again, it just brings the question of we just need to find the certainty here. We need to know where we are at. It's just a very, very hard process of understanding where all this is going to end. If you're a fundamentalist right now, then your question is, well, we need to have the data so we can extrapolate the numbers. If you're a technical analyst, well, we're going down right now. We're not seeing anything in sight, and volatility keeps spiking, and bonds are being defensive. But we're not hearing the end of the road here, and we need to come to the end of the road. We need to start shifting towards something different. And unfortunately, it'll not happen until we know where we're at. Now, as a silver lining to this, not everything is being beaten up. There are some sectors and there are some stocks that are still looking reasonable, and those are stocks that are very defensive. Also, another thing that's happening, and I'm 90%, 95% technical based trader and 5% fundamentalist. Another thing that's happening, momentum levels are starting to become overdone. to the downside. So we are starting to see that rubber band starting typically what happens is this: the rubber band stretches out, and then when it gets to a certain point, it snaps back. But the rubber band needs to be stretched out first. Well, that rubber band is starting, it's not extensively stretched out, but it's starting to pull quite a bit. We're starting to see levels in technology. We're starting to see levels in consumer discretionary that are near 10-year lows. It's pretty significant levels. We're
Yeah.
starting to see the number of stocks. I have this indicator that measures the number of stocks that are making 90-day highs or lows, quarterly highs or lows. And usually when it gets to 500, 550, it tends to bottom out. We were this morning in the high 600s. So there are certain signs right now that are pointing to the fact that we're starting to get close to where we need to be. Another major factor that I'm looking at is volatility, short-term 30-day volatility via the VIX. And volatility right now is not as high as it was a month ago when we made a previous low before this one. So volatility is telling us, volatility, market internals, several speculative sectors are telling us that we may not be there yet, but we're really getting close. Point is, let's just say that you have a bridge, and let's say the bridge is 100 feet above the ground, okay? Well, you're about 10 feet above the ground now. You're not 100 feet. You're maybe 10 feet or 5 feet away. You still get a little injured if you fall, but you're not gonna die, okay? If that analogy makes any sense. We're getting close. That rubber band is stretching. Now, I do want to add a very important thing here. One of the downsides of these studies that I'm telling you about is they don't necessarily pick the bottom. They pick moments of bounces. So in theory, we could have a nice bounce right now. We can recover, say, 20, 30% of what we lost and then start going down again. So these technical levels, they're not really great at showing us finalities. They're only good at showing us where we're at right now and what could be the next probable move. Again, I don't want to get you too excited. I want to give you the pros and the cons.
Yeah.
Another negative is this: we are trading below, and a lot of folks don't want to say this, but we've been in a correction for quite some time. We have less than 50% of stocks trading above the 200-day moving average. That's been going on now for 2.5 months. It didn't just start. We are trading below the 200-day moving average on every major indice. My point is, even if things get better right now, we don't know if that better is going to hold longer term or if it's going to be for very short term. We don't know if this is going to be a bounce coming our way or if this is going to be the end. And again, we won't know till we start getting some finality.
All some really, really good points, and speaks to what so many investors, retail investors watching this right now, are feeling. And that's just the uncertainty. We've been doing video after video of this stock is at a 52-week low. It's a great buying opportunity. Don't miss the run-ups coming soon. But it might run up and then go back down. And I think that's just the season that we're in. And I also think that's hard for investors after a full year of a bull market, actually more than a year of a bull market, to now kind of having to adjust to not knowing, are we going up long term or will it go back down again soon? So I want to just talk about some strategies for investors right now. What we're hearing is either I'm just not buying right now at all. I'm closing down any buys, any sells, just getting out of the market until things settle down. That's one strategy, but I want you to walk through what are some different strategies that investors are using to try and keep their investments safe.
Well, that's a great question. That's actually a fantastic question. First of all, not all is horrible. There are certain industries and sectors that are doing well. The first tip I want to give everybody is this, and this is very, very important. Whatever you do right now, find a stock. If you're going to buy a stock, find a stock that's been moving up before all this started. In other words, find the stock that's been going up for the last 3-4 months. Don't buy stocks that have been going up for the last week or two. That's not where you want to go. Those are rebound stocks. That's picking the bottom, and that's bottom fishing, and that's going to get you into a lot of trouble down the road.
Yeah, I know as a trader, especially, you are really big on avoiding those bottom feeding stocks and looking for winners. I know you have some specific stock picks you're going to share with investors that could be those winners even in this market right now. We're going to get to those in just a minute, but before we get to the stock picks, I want to share a little bit more about Roger's trading strategy of only making trades that have historical win rates of 70% or better. He has it all for you in a free report you can download by scanning the QR code right now or clicking the link in the description of this video now. We're also going to have it up for you again at the end of the video. It's a totally free resource that really dives into his strategy even more. So Roger, diving back into your stock picks for right now, if investors should be avoiding those bottom feeders, what should they be looking for when picking stocks right now?
What you want to do is you want to find stocks that have been brushing off this downside for quite some time. Let me give you some ideas, okay? There are certain subsectors and subsectors that have been doing quite well. For example, utilities have been doing quite well. Consumer discretionary stocks have been doing quite well. Fintech stocks, financial tech stocks like Chicago Board of Trade and Chicago Board of Option Exchange, they've been doing pretty well. CBOE, CME, those stocks. AT&T, Philip Morris, defensive stocks. To give you guys a good rule of thumb, find stocks that are trading above the 200-day moving average, above the 100-day moving average, above the 50-day moving average, and here's the kicker, above the 8-day EMA. If you can find a stock that's above all those averages, the odds are that stock has been going straight up or almost straight up. If you were to look at AT&T, or if you were to look, for example, at Philip Morris or Chicago Board of Trade, they look like they've been basing near all-time highs or swing highs for the last several months. So you don't want, the biggest mistake folks are going to make right now is they're going to start bottom picking and they're going to start looking for deals. Folks, that's the last thing you want to do. You want to wait for the market to bottom out and to give you confirmation that we are done. And unfortunately, I don't think we're going to see that, as we discussed, till we see some finality, or at least the market perceives it as being finality. And that is not happening right now. So there's nothing wrong with adding some insurance stocks into your portfolio, maybe some fintechs like the exchanges, maybe some consumer staples. Those stocks are still doing well. Also, I believe gold still has some potential upside left. I think other countries are, because of the U.S. dollar, with the recent news, the U.S. dollar has been in a dumpster. And I think a lot of folks in a lot of different countries are starting to like the shiny gold once again. I know China's been securing gold now for several months, maybe even a year. I believe Japan is going to start accumulating gold. Don't throw out the baby with the bathwater. There are still assets to invest in this market, but you have to be very, very nimble. You have to be extremely defensive, and you have to be patient. And patience and investors, those two things, usually they don't go together. People love their FOMO.
That's right, absolutely. And you have so many great points to make on so many different topics. I feel like we could continue talking. I'm going to narrow it down to just the last couple of points that we want to make and give investors, again, just some take-home points on what to do right now, because that's everyone's question. You gave
Yes.
us some good industries that still have some potential for growth, that are good defensive stocks. I want to hear what to stay away from. What are some of the industries that are going to be hit the hardest because of the tariff talk right now?
And I guess for you and I, we've been living this day to day, so it's a little more obvious. I do forget that, but yes, there are definitely stocks you want to stay away from. You want to try to stay away from consumer discretionary stocks, Nike, Wayfair, companies that have a lot of exposure to China, to Vietnam, to Asia. Most of what we get from Asia is obviously going to be tariffed a lot, and then we're going to have reciprocal tariffs. I mean, I was just looking at Nike this morning. It made me want to cry. Stocks like anything with clothing, anything relating to clothing stores, anything relating to soft technology, not chip related. In other words, companies that make parts for other companies are not going to be good. Auto part companies are going to be right now. AutoZone, Orly, those type of stocks, I wouldn't be looking at. But most importantly, anything to do with consumer discretionary. Consumer staples are still going to be there because we need consumer staples to function, but we don't need consumer discretionary. So you've got a double whammy. You've got a softening economy, and you have even before this started, we had a lot of trouble with brick and mortar stores, and now we have this. So this is going to really, really. I wouldn't focus too much on restaurants, food type of companies, but clothing companies, retail. Those sectors are going to be hit the hardest. They're going to be hit the hardest, and also technology stocks. Technology stocks for obvious reasons because a lot of these parts are made in China. Automobile stocks, Ford. Your Chevys, your Ford, your General Motors, your Fords, even I mean, it's even going to impact Tesla, So it's going to have an impact on the broad market. But think about this. Whatever the best way to do it is this, because we could spend the next 10 days talking about this. But the best way to do it is this: ask yourself, does the company that I'm looking to invest, does it have a lot of uncertainty surrounding this tariffs? In other words, when you buy Nike, most of your Nike shoes are made in Vietnam. Vietnam just got tariffed. They're going to do counter tariffs. This whole thing is just starting out. You want to avoid that. So clothing companies, material companies, car companies, anything that has to do with manufacturing outside of USA, which, as we all know, is really, really big. Also, and I hate to say this, Amazon's going to get hit really, really hard. If you recall, during COVID, it was very, very hard to buy things on Amazon. One of the reasons it was really hard to buy things on Amazon, and we all painfully remember this because it lasted a very long time, is because we learned that even though a lot of the things that are made in the USA are made in the USA, but their parts are made in China or Korea or Vietnam or God knows where. So the problem is you can't have a finished product. I remember when a bunch of cars were sitting in the yard because there was a shortage of chips. They couldn't sell the car. So anything that has to do with global trade, you want to stay away from global trade. I think things like restaurant stocks, local insurance stocks, utility stocks, those things will be okay. But anything to do with global trade, you really have to be very, very cautious right now.
Yeah, such a good point, and so much volatility we're seeing in the market around those sectors right now. Like you said, Nike's a great example or a terrible one, however you want to
Or
look at that.
yeah, it's I mean, if you want a short, it's a great example. Also, a lot of as you are very much aware, a lot of traders are options traders right now. Well, with the VIX spiking right now, option premiums are very, very expensive. So even if you do have a good stock, you have to be very careful. And if you trade options, try to go in the money. Don't buy out of the money options because you're buying pure premium. And the only part of the option that gets inflated is the premium part. The intrinsic value doesn't have any implied volatility, doesn't work on that. So you want to buy a little more expensive options right now, even though it's counterintuitive, because those options will not just balloon up because of volatility. Just wanted to kind of throw that out there for folks who, options traders out there too.
That was my last question. Because you are the trading expert, you're with Trading Pub. This is what you're doing every day is in the market trading. Is there still money to be made for other traders like yourself who are doing this on the daily right now with so much volatility and such a steep drop? Can you still make money in a market like this?
Yes, we have two day trading programs, and that's one of the programs that we highlighted here. It's a day trading program, and it trades on 0.5% moves intraday. We have a stock program, which the Trading Pit and the Pro Trader's Edge, and these programs are all based on intraday movement. So we do have plenty of things that are available for traders to take advantage of this market environment that actually thrive in this kind of market environment. But it's not swing trading. It's not position trading. That has to wait till the volatility is over because we're having so much back and forth on foreseeability right now.
Yeah, again, you can find more information on Roger's specific trading strategies with this free download of 5 candlestick cheat sheets to help you pick some thriving trades even in this market. Again, scan that QR code or click the link in the description of this video to get Roger's free cheat sheets right now. Thanks again for joining us, everyone, for this conversation. Let us know how you're doing and what you're thinking about the market right now, or if you have any of your own strategies that are helping you weather the storm in the market. Thanks Thanks again for joining us, everyone. And as always, happy investing.